the trade location. So why trade location is important is because, let's say, you can easily tell that the higher time frame, or market has been moving higher for longer duration than it is falling. Okay, just looking from this low to today. Okay, so we have been moving higher for 1 2 3 4 5 6 almost 7 days, and this is just a second day of lower value area, or third day of lower value area. So what can happen, these HVNs can provide support, and in fact we expect them to provide support, because that is where the struggle was, and then it resolved to the upside. Similarly here, another HVN struggle, and it resolves to the upside. So if this is coming to an HVN, even though the value is developing lower, is it a good idea to sell before knowing that yes, we are accepting below that HVN and the HVN is no longer defending? If we don't have this clarity, it would be stupid to sell here. All right, now intraday, okay, intraday you can look for intraday trading guidelines, and it might give you a short trade. The market might come here and bounce back sharply. In the meanwhile, you have taken out a nice clean intraday trade, that is allowed. But if you're planning to hold it, if you're looking at this rejection and you are saying that okay, see, value is forming lower, now the trend has decidedly changed, no, you have to look at these HVNs. All right, so I'm not saying you cannot short. My point is, you cannot short before you verify how the market is going to react to this HVN. All right, now if we take down this HVN, the likelihood of this HVN reversing the market, or this HVN, this is actually already repaired, so there are no more HVNs, this is the last one, this HVN reversing the markets are not that high. Because see, if these are strong buyers, then obviously any supply that came above this buying dominance, all right, buyers greater than sellers, because follow through is higher. Now if someone comes and sells, these buyers, if they are committed to higher prices, they will absorb that supply and they will push the auction higher. All right, so you can safely say that the buyers here are similar to the buyers here. All right, so these buyers are also the same, and if this HVN goes, then there is a high likelihood that this may not hold, and we might go towards testing of these poor references and all those kinds of things. All right, so this is how you should look at the auction development process. All right, see, many times people come to me and they ask me, how can I enter, how can I exit, what is the accuracy of market profile, and all those kinds of things. See, market profile is not a trade setup. Okay, like price action, there are trade setups, fixed trade setups, or there are harmonics, and there are many other ways to trade and analyze the market. But this is not a trade setup per se. What this tool is helping you do is just get a behind the scenes look at what is happening, right? And not get caught up with these kinds of very volatile price moves, right? Just imagine if there is this kind of a move and we are not able to take out this HVN, or we are not even close to that. All right, if you can see, if I draw it again for you, we are not even close to that HVN yet. Makes sense? So if we are not even close to this HVN, why would we side with the sellers so soon? We need to see some confirmation, some conclusive action that tells us that yes, market is going lower. Okay, now we look at other subtle clues. There is a poor high. Okay, so okay, this was a strong rejection, but then this start of the day is a little doubtful. All right, we get IB range extension, we get we get a C period range extension, but then what after that? Nothing. Why nothing? Why the sellers are not eager to take the markets to this reference? This is potentially an important HVN, right? So why are we not rushing there? Why market kind of lazily bounced back up? All right, and neither did it go and challenge this high. So what it tells me is that there is some confusion at the moment, and obviously there will be. Why? Because smart money wants you to be confused. All right, why they want you to be confused? They want half the people to think that we are going to break, and they want half the people to think that they are going to the market is going to rally. Now why? See, what will happen is, if people are thinking that this is going to break down, what they are going to do? They are going to sell. Great. Who's taking the other side? Obviously buyers. If these are retail traders or amateur money Who is taking the other side? Smart money. And this, if the smart money thinks that market is going to go higher, okay, then why they want some people to buy? They want people to buy because, let's say, yesterday people bought here, 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 here. What is happening below this low? What are there below this low? Stop losses. Market goes there. Is it continuing freely to the downside? No. Lots of overlap. So it's struggling to go down. Why? All these sell orders, all the people who bought yesterday and they believe that, okay, market is going lower now, what to do? Get out of your position. Or they, put their stop loss here. The stop loss was taken out. Who's taking the other side? If these buyers are trapped, who's taking the other side? The other side is again taken by the smart money. Alright. Now let us go to this chart and you will see it further. Why do we cross above VWAP so late in the day, give a nice pullback, some follow through? Why is this? People think that we have fallen too far. Market is not going lower. This is some kind of a support. And now VWAP has given confirmation, let us buy. What does intraday trading guideline tell you? Okay, value area placement. Is it higher or lower? Lower? Are you allowed to buy? No. Finish. The discussion finishes there. Alright. And whoever bought here, right? Now, or whoever started buying as the market started going higher, what do you think, where do you think they were putting their stop loss? If they are retail traders, obviously they are going to put their stop loss below the recent low, that is that day's low, because they don't want to risk more. They have been told that if you risk small, right, your capital will be preserved longer and you will be able to make money. Not true. You have to take appropriate amount of risk. Now what is happening? Stop losses are gone. Alright, what is the market doing? Again it tries to go higher. First stop loss was taken out. Again it tries to go, again it comes down, takes out stop losses. What is happening here? Is some sort of inventory transfer. Alright. Now what happens, if you rely on this too much, whatever I said right now, and if the market tanks now, then suddenly people will be, coming for my throat and they'll be saying that, okay, you told us all wrong. Market went lower. You don't understand what you're doing. That is the reason why we look at clear indications of the directional bias, right? Now, if the smart money wants to take the prices higher, this is where they have bought, right? Because this is a struggle which resolves to the upside. See, this is short in the hole. Many people are asking about shorting in the hole. What is that? See, when people come late to the party, basically, right, the party is about to end and they want to make the most of the party, alright, maybe the starters are going away or whatever, drinks are going away, so they will try to cram up their positions here. Why? Because they possibly missed this move. It was not easy to trade. So they missed this move. Now they want to join it. So they sell and suddenly realize that, okay, here the market was falling so sharply and here it is not forming, not making a new low after the morning low. They panic, they start covering their position. Where the real buying start is when the profile starts to thicken a little bit. Why? Because now, who are these sellers? These are slightly longer term sellers. There is a top, there is a bottom, this is a pullback, and slightly longer time frame sellers are selling this pullback, hoping for the market to go down. They are thinking that this is a P on a pullback. We knew that this was potentially an inventory adjustment break, so this high was likely to be taken out. Market continues to move higher. So this is an important HVN. This structure is not very good. Here it is not a very clear attempt to move higher because we have IB range extension to the downside, right? Here we have a struggle which resolves to the upside, then we form a value area higher. So for me, this is a very, very important HVN. Now, if this HVN is not taken, we have a failed auction, we have a lower value area. What does that tell you about this whole zone? This is a zone where there is indecision, alright, where there is lack of clarity. And what can happen is, lot of things will happen in this zone that will attract traders. The smart money will try to attract lots of traders. And those traders, when they come in, they will be trapped. One of the two things will happen. Either they are trapped in to bad trades, or they are trapped out of good trades. So if they have a good trade on it, what I mean by that is eventually the market, let's say they have a long and market eventually is going to go higher. So it's a good trade. But what will happen? Their stop loss will be taken out. It will be triggered. A panic will be created and they will throw their position. If the market is going to go higher, they will attract you into shorts one way or the other. And as the shorts pile up, suddenly when the market starts to actually go higher, all these shorts will provide fuel for, you know, it acts like a rocket fuel. It fuels the rally higher. So you need to understand, like, you need to find a good trade location. What is a good trade location? Is a look. It's not a good support or a resistance. It is an area where there is great amount of clarity. All right. Now, again, clarity means people want, do I buy or sell? No, that is not clarity. Clarity means, like, if this HVN goes, if this HVN is taken out and market starts accepting and going lower, then we know that the directional bias is lower and seller are in control, and all this zone was used to create shorts. So most likely we are going to repair all the references, doubtful references to the downside. If it comes here and gets rejected sharply, what it means is that all this is just created to trap amateur traders into bad trades, that is shorts, and their shorts will be used as fuel to take the prices even higher. So this kind of becomes your Lakshman Rekha, or whatever you call it, line in sand, or whatever metaphor you want to use, right? This is that zone. That is a trade location. Why? Because once it gives you some clarity, okay, it gets rejected. So trade location does not mean you have to buy here. No. It means that it gives you clarity now that, okay, market wants to go higher. It has taken out VWAP, taken out this high. Everything is looking good. Great. Okay, fine. Again, maybe this day, next day, it buys to pulls back to VWAP, you buy. And then market goes even higher and you make your money. All right. Or if it gives confirmation, higher value area and VWAP holding, range extensions happening, what do? You establish a credit spread. Obviously, you have to consider when it is happening and all the credit spread related rules you have to follow. Rules, I mean guidelines, not rules. So this is how you trade. This is how you trade. Now, then you might ask, then what about intraday? What should we do about intraday? We cannot wait for market to come and test this HVN and then tell us what is happening, whether they are breaking. Yeah, I understand. So what do? You go to the shorter term chart and you apply intraday trading guidelines. Simple questions. Is previous day's low taken? Yes. Is the value forming lower? Yes. Is the price below VWAP? Yes. Is the VWAP trending, in this case down? Yes. What do? You sell all the pullbacks to VWAP. What will happen? What's the worst thing that can happen? Market will go higher, take your stop loss. So are you, kind of putting in a 200 point stop loss here? No. What is your stop loss? If this is VWAP and if you have taken this short, you put a small money stop above that. That's it. You're not waiting for this high to be taken out, this high to be taken out. There is no waiting. There is no giving market benefit of doubt when you are trading intraday. Either it works or it does not. Right? So now you have shorted. You have put your stop loss here. Market goes lower. Let's say market starts trading below this low. What do? You bring your stop loss to cost and then forget it. What will happen? The worst thing is it will go hit your stop loss. You will be out. Maybe you will incur some cost, brokerage and all, or even if that is, you have put a stop loss in such a way that it takes care of that, you will lose nothing. Okay, what happens? It falls again. See, when it is pulling back, and if all the conditions are still valid and it hits your stop loss, what you are going to do? You enter again. You enter again. See, if you want to watch a movie, you have to buy the ticket. All right. So just the other day it happened that I wanted to watch a movie with my wife and we booked the tickets, and some situations developed that we could not go to the movie. So and we could not cancel the tickets also. So we lost the money, right? But we wanted to watch the movie. So I assumed that Monday was a holiday, first day of the year was a holiday, and we went for a movie. We bought the tickets again. So what is happening here? We wanted to watch the movie. We were committed to it. So we missed the first chance. What do? We take the second chance. Cost? Absolutely, there will be a cost. So ideally, we bought the tickets twice to watch the movie once. All right, but were we happy after watching the movie? Absolutely. Did we enjoy the movie? Yes. So are we, crying about spending some, say, extra 500-600 rupees that we lost? No, not at all. Not at all. Yeah, is it a waste? Well, if you enjoy the movie now and you said, okay, glad we booked the ticket again, we watched the movie and it was really fun, then that first, cost of tickets that you bought and you lost is worth it. Now, why we could not make it to the movie? It was for some personal reasons which were more important than the movie. Simple, right? So, I want to get into this trade. It is important for me. Why? Because it follows my guidelines, right? So I have to trust them. It is more important than making money. So I enter here. Okay, I enter here. I take that trade. I let it go below this low. I bring my stop loss to cost. And then let's say it bounces and takes my stop loss out and again shows me signs of going lower. I will take it again. Why? Because following the guidelines is more important. Yeah, what will happen? I lose some money. Okay, I lose some money. Maybe it again hits my stop loss or it again takes me out at cost and then does not give me the signal again. What happens? I have two scratches, two trades which I had to scratch. Fine, there is nothing wrong in it. You have to do it. You have to do it. You have to believe in the guidelines. Markets are not mechanical. All right, markets are not going to follow a very very strict formula tick by tick. No. Yeah, they are working in a framework on slightly higher time frame. Over a period of time, they will follow all the rules, but they are not going to, follow exact to the tick what you are telling them. All right. So this is, this is how I would like to, or rather, I personally like to trade, or I would trade, because unless and until you trust in a framework, in guidelines, and then if you don't follow them, if you second guess them, then there is going to be a problem, and that is strictly for intraday. All right.